I'm Grace LeConte. I'm a strategic risk expert, which means that I help business owners, especially in healthcare practices, to understand the vulnerabilities of running a business and to make decisions that look toward the future and to understanding the threats that could possibly cause their company to fail or problems that might be very difficult to see at first. So today is a topic that a lot of people who I consult with don't like to talk about, even though it is extremely important in running a business. It's something that I actually tried to avoid for a while because I personally don't particularly enjoy some aspects of this. And the topic is finance and especially profit margins. Now, I have a background in healthcare management, and I've worked with a lot of different healthcare organizations and have done a lot of analysis with helping them understand their finances. But my interest lies in analyzing numbers, not necessarily in applying those as a business owner myself. So there are some challenges with running a business that I completely understand, and I commiserate with those of you who may, if you own a practice or if you own a business yourself, or if you're responsible for the money, it can be very difficult to overcome barriers that are keeping you from becoming profitable. And in some cases, in my experience of speaking with very intelligent and knowledgeable business owners, the topic of understanding profitability is very misunderstood. It's something that really surprised me. For some reason, I expected that if you get a lot of training and you're an expert in your field, that you would automatically know how to run your business, how to make money, how to make sure that you're not spending more than you bring in. But I found out through many conversations with well-trained, educated, intelligent, well-meaning business owners that that is not the case. In fact, well, I want to start out by saying, first of all, if you're watching this and you understand finances, you understand how a balance sheet works, how a profit and loss statement works, and you're very comfortable with the numbers in a business, then that's great. I applaud you, and you can watch this to maybe gain additional insight. But if you are like the other half of people who really feel uncomfortable with financial sheets, with reports, with the idea of how to make money or lose money, and if that makes you feel nervous or even ashamed, which is a word that comes up quite often in my discussions, my coaching with practitioners and business owners, the word shame actually comes up very often, then this is a topic that I think you'll get a lot of help from. This discussion, along with a lot of things I've written about on my blog series, delve into the emotional component of how we make decisions. And it's just impossible to separate the emotion of feeling nervous and ashamed about money and running a business that is successful in putting the pieces together to earn a profit and to eventually have wealth. It's just a very difficult balance if you have previous experiences where you did not do that successfully, or where you have some hidden barriers that make you feel concerned or nervous about making too much money. It's actually a topic that comes up so often that I've written about it in a series called Transaction Avoidance Syndrome. This topic just came to my mind after I spoke with one of my clients. She's a practice owner, a trained physician. She's been in business for over 8 years, and she's struggling to make a profit even after all these years. She feels stuck. She's very well known in the area, and she's done a lot of accomplishments, but she can't share her feeling of overwhelm and failure because she feels so ashamed that she hasn't made a profit after all these years. She has nothing really to show for all of that work. And this is a theme that comes up again and again. And so I decided to start writing about this because I think it's not something that's it's not something that's so unusual. And yet people don't seem to want to talk about it. We want to talk about success and crushing it and reaching your goals and pushing toward the achievements of being wealthy and making tons of money. And I think that some of that comes from a cultural expectation that may be kind of unhealthy. It may be out of balance with the other aspect, which is making sure that we're comfortable and confident with our own abilities and generating enough to make the business healthy without going into too much debt or into overusing resources. I mean, there's a balance. A lot of the clients I work with are very concerned about presenting strong care for their patients or their customers and establishing relationships that last, and in not showing an overconsumption or an over focus on wealth building. They don't want to show that they are greedy. And so unfortunately, I think that this sometimes becomes out of balance because then they create systems that don't work efficiently and that they aren't generating enough to pay the bills that they have, the expenses of the business. So that's just some background on kind of my philosophy about money and profit, and I'll be getting into some of the definitions of this in a second. All right, so I talked about a client of mine who felt stuck, and she was afraid to look at her finances. So one of the reasons she hired me was that she felt I could help her bring out some of these questions and ask questions that are very difficult for her to face alone. And that's one of the reasons a lot of people hire me, is because of my devil's advocate perspective and my ability to kind of cut through the emotion and find the root causes, which sometimes are very deep inside us. We don't always want to talk about the reasons why we do things, but because decision making in business ownership has a lot to do with your beliefs and your philosophy, we have to get to the root of what those are in order to understand why the outward decisions are happening. So through my sessions with this particular physician practitioner owner, she realized that she had a lot of deep-seated anxiety from past experiences where she did not have enough. She came from a background where she had a lot of loss early in her life, and so she was concerned about making enough to keep her family safe and secure, but also she was making the opposite mistake of giving things away for free, and nervous about charging her patients appropriately for services that she had done. So a lot of this was coming out in the behavior of her practice, and I helped her to kind of uncover the root of this, which was coming from her own decisions to avoid making decisions about money. It just became obvious through our discussions that that's what the real reason was. So another of my clients has mentioned that she never learned business in medical school. It wasn't taught. Business was kind of an afterthought, and how you run your practice or your priority list, it was more important to get you educated and put you into the working world. And if you're a practitioner and you joined a practice with established policies and procedures and methods, then you may not have had to set that up. But once you start your own, it can be very difficult to know how to put everything together and what to look for, what indicators are showing that your company is doing well or not doing well. So I think fear drives a lot of this. And as I mentioned, transaction avoidance syndrome is a condition that I call it this because I believe it is a subconscious avoidance of a topic that can be very difficult to talk about. There's a lot of shame involved in not succeeding financially. Our culture seems to want to encourage and reward people who fake it till they make it. So this term is, it means that we put on a facade, an outside picture that we are extremely successful and financially independent, when in reality the business may not be doing well. And either we have two different concepts about this, one the reality and one the fake, one the fake outward reality and one the actual numbers, or we truly believe that everything is fine, and so we try to even hide from ourselves. So I think that just like the 4 responses to fear, our fight, which means that we are refusing to hear it by outwardly creating motion to stop that message. So we could be very insecure or, angry about it. We could be refusing this topic altogether, or we could flee. The flight aspect of fear avoidance or fear response is that we may avoid the topic, we may run away from it and just shut down and refuse to talk about it at all. That's what a lot of my clients end up doing. And then the third response to fear is freezing. So this would be indecision, not making a decision at all, or pretending like things are fine when they're not. And this is actually a very dangerous aspect of a fear response because the problem continues to happen, the attacks continue to happen, and yet you're not responding, you're not adjusting or making changes. The most healthy response is called face. So that's where you acknowledge the problems, you acknowledge the attacks or the issues that are causing you to feel afraid, and then you are able to adjust and speak as with authority by looking at the situation with a problem-solving point of view. So when it comes to finances, a lot of us can avoid or be angry about it, or just simply pretend like it's not happening, and those are not great responses. But if you can face the problem by understanding exactly what is going on in your business or in the business that you're involved in, then there's a much better chance that you'll be able to overcome those problems and be successful, rather than just pretending with an outside, fake it till you make it, pretend exterior. Okay, so the topic of money can be very emotion filled. I believe that decisions about money are always based on our own beliefs and our philosophy, which a lot of times is rooted in childhood and adolescence. The way your parents may have taught you about money will have an effect on how you treat it. And also our beliefs and philosophy impact our decisions. So strategic risk has to do with the decisions of a company in achieving its long-term goals and objectives. And decisions that have to do with the money aspect of this are very important, because finances are one of the most important aspects of keeping a company growing. So I use what I call a strategic growth sphere, which is based on the balanced scorecard, and I'll get into that in a minute. The balanced scorecard is kind of a classic strategy tool that's used to show the four aspects of a business: finances, operations or processes, the people, and then learning or growth. So finances, money has a very important aspect in making sure that your company still can operate. If you run out of cash, you will not be able to keep your company going for much longer. And if you're not aware of how much cash you have left, that can lead to a lot of bad decisions or indecision, or feeling stuck and embarrassed and ashamed, overdrawing on your bank account, having things not paid. It can just cause a downward spiral. Biases and blind spots often lead to poor choices. And I decided to start talking about this partly because my personality type is very sometimes controversial, confrontational. If you know me personally, you know that I like to debate, and that's something that in the past I tried not to do. I tried to be very harmonious and try to get along with people and not bring up topics that were difficult to talk about, but that's not who I am. And although I have tempered the way that I portray these topics and the way that I discuss them, certainly with my clients and with others that I work with, the underlying truth is still there. And I think that sometimes it's important to talk about things that are difficult because they need to be discussed. So financial problems in a business may not be fun, but it is so important in order to make it healthy. It's similar to a surgeon that has to cut healthy tissue in order to heal part of the body that is unhealthy. It's not ideal, it's not fun, it's not pleasant, it can be painful, but if you want to heal the deeper problem and the issue that is causing the illness or the disease, it's extremely important to go into this situation by understanding what is painful about it. And sometimes this can be because of barriers we set up ourselves with biases, ways that we perceive things that are not realistic, or with blind spots, which are aspects of how we see the world that may be missing certain key bits of information, or that because of our perspective, we overlook things that are actually there. So these can lead to poor choices. As I mentioned, the fear response can lead to insecurity, and I believe financial insecurity is one effect that can happen from biases and blind spots. Transaction avoidance, as I mentioned, not wanting to charge people what is fair, not chasing up bills that are unpaid, not feeling comfortable selling things. All of these are symptoms of a deeper issue that is causing you to feel unhappy or uncomfortable around money. Business indecision is another effect. So feeling stuck and frozen and not knowing what decision to make, whether to invest more money, whether to stop certain services, or to change the decisions that you've made in the past. That can be very frightening if you don't know what to do. And anger, which can lead to blaming others, or to feeling ashamed, or to shaming others. Trying to find a reason why you're in the situation you're in, and then making that anger go outward by finding others who may be at fault, even if they're not, or turning the anger inwards and causing that to lead, that can lead to depression and anxiety, anger turned inwards. And we don't want any of these things to happen. It would be more effective to be a business owner who feels more confident and comfortable with the topic of money, and especially what your needs are as a business owner to keep your company operating in a profitable way. So that's kind of the introduction to this topic. I wanted to go a little bit differently this time, because in the past I've just answered questions that were asked at different points in my consulting work and even leading up to this live event. But instead of jumping right into those, I wanted to give some background on my own philosophy about money and why I think it's so important. So the first question is, which numbers should I be looking at to make sure my company is growing? And my answer to that, which numbers are important, my answer is not necessarily numbers, because like I said, the financial viability of a company depends on your decisions, which are based on your beliefs. So my questions to answer that would not necessarily be, look at your outstanding AR, look at your profit margin, look at your net income, that is actually secondary. The main questions would be, first, where does your money come from? So where is the money being generated from? What kinds of services or products are causing you to have that revenue? Which customers are paying you? Where are you getting the money in the first place? When you start to think of this in terms of a qualitative method, it can open more doors of opportunity instead of just looking at simple numbers, because there's so much more than what a report tells you. There's a lot of other questions that I would ask to look outside of just a simple financial report. And a lot of times there are things that aren't even considered when you just look at your balance sheet or your profit and loss statement. There are many other things that are important in terms of the goals of the company, and just considering where your money's coming from, you would need to look at actual numbers, but consider also the quality of that money. Is it something that's easy to have a transaction with? Is it something that you don't have to remind certain customers to pay you? Or do you have systems where some of the money is being generated very quickly or immediately, as opposed to other aspects of your business where you have to chase it up and it's just really difficult to collect. So that's the first question, where does money come from? Second question is, what are you spending? So we talk about profit and loss. The loss part would be expenses. Where is your money going out? Have you made investments that are not turning out to be as profitable as you'd hoped? Do you have higher expenses than you should? Have you made commitments financially that were not so good for the business long term? Are you getting into further debt every month? Are your bills going up? A lot of us have bills that keep rising. That's a reality that you need to consider, obviously, as a business owner. And instead of waiting for no money to be left, it would be better to look ahead. So you can ask yourself, am I more extravagant than I should be? Am I spending more money than I should at this point? And also, are you making decisions with overconfidence? Are you expecting the business to be so productive and to make so much in the future that you're basically borrowing from the future now by making investments or taking loans or purchasing capital expenses, buying things ahead of time in anticipation of some future payoff, but that may never happen? So what is your level of overconfidence? So that's the second question. What are you spending your money on? And the third question is, where are you going? Where do you want that business to go? What kind of financial goals do you have? Do you want to be at a certain place financially, professionally? Do you want to be in a point where you could sell the business and make a profit? It's so important to think about this before it happens, because the decisions we make now affect what happens in 10 years. And the decisions we made 10 years ago or 5 years ago affect what we're experiencing right now. We reap what we sow. So consider what you'd like your business to be like, what you'd like your life to be like in 10 years or even 5 years, and try to visualize what would need to happen in order for that future point to take place. And that question will help you consider what financial decisions you'll need to make in order to achieve those goals. So you could also consider the goals themselves. Are you looking for security? Are you looking for a sense of purpose? Are you hoping to have stronger relationships with people? Do you want to have a certain amount of income every month? Do you want to have a massive nest egg of $5 million in the bank? Would you like to generate enough that you can be generous and give to others? Those kinds of goals are very personal, but they will have a huge impact on how you make decisions in your business. And the fourth question, after you think about where you're going in the future, is, are you on track to get there? So rather than reviewing specific numbers, my first set of questions to someone who's concerned about their profit is to ask these questions. So the final one will be, if you look at how your business is going right now, will that generate the money that you want to have in 5 or 10 years? Are you on track to be saving enough to have the leftover, the profit, in a few years? Or are you so close to the line of breaking even that there's just no chance of saving enough, and then you won't be able to expand your business, you won't be able to generate more income for yourself? There are a lot of effects that happen if you aren't making that money right now. So when we're talking about how to measure numbers, how to measure whether you're on track to get to a certain financial goal, like profit margin, profit margin itself is actually a percentage. So I guess we can talk about that really quickly. What is profit? Profit is a measure. It's a number that is just the sales that you've made minus your expenses. It's pretty simple. It can get very in-depth and involved, and if you are a finance guru or you understand finance really well, or you enjoy doing this kind of thing, then you know all about the income statement that includes gross sales, and then you take away the cost of goods and the operating costs, and you take away depreciation and interest and taxes, which If you take all that away, then you're left with a net profit. But basically, if you take away everything that costs money for your business to run, then what you're left with is a net profit. So a profit is just a measure. It's a number. It's just a point on a graph that shows how much you've made. And just looking something up here. Okay, so it's a raw number or a data point, a reading, kind of like the electricity checker comes to your house and looks at the rate at which you're using electricity, or you get a bill in the mail and you see the number of the amount that you've used. That's just one point. So that's called a measure. If we make a ratio out of that measure, comparing it to something else, that's called a metric. So we analyze relationships in order to understand movement and basically the effect that the number has in relation to something else. So a metric would be something like a profit margin. So profit margin is a percentage that shows how profitable your business is. It's sales minus expenses divided by sales. So it's just a percentage that shows, are you making money overall or are you not? And sometimes this could be a very low percentage and other times it could be very high. It depends on, are you spending more than you make, or are you spending too much and you don't have anything left over? So a measure is simply a point on a graph, and a metric is a percentage or a ratio or an average or a rate of something happening. So a metric is used to analyze relationships between things. And then the most important of those metrics is what we call a KPI, a key performance indicator. Now, if I've lost you already, I'll try to make it real simple. A KPI is simply the important numbers that show if you're reaching goals or not. That's really all it is. And some business owners like to have a dashboard, which is a visual representation of how well their business is doing, and it would take into account things like how many customers they see in a day or patients, how often they're seeing them, how many maybe visitors to your website, although it would be more important to look at conversions, people who come to your website and buy something from you, how much percentage of net profit you're making from each patient, or what types of services are more important. There's so many different KPIs that you could be looking at, and it all depends on your industry and your particular niche, the specific area that your business is in, which I'll get to in a later live event. But the KPI is basically just the most important ratios or percentages or moving the needle indicators in your business. So if you are able to look at just 3 to 5 most important numbers, and that will show whether you're moving toward your goal or not, then that's what the KPIs are. That's something that you should be looking at pretty much every day. And those are the numbers that you want to increase, or in some cases decrease, like customer dissatisfaction rate or rate of returns, or there are other ones that you may not want to increase, but depending on how it helps your ultimate goals, that's what you're looking at. So KPIs then lead into critical success factors, which is another really popular strategic business term. That's just the decisions that are vital to make the strategy work. So specific KPIs would need to lead to the ultimate objective, like the specific tasks you're doing. And then ultimately, the top one would be the goals and objectives for your business, where you're going and how you're going to do it. So let's see, we've gone over the strategic growth sphere, which is basically a balanced scorecard, except the concept is you have to grow the sphere equally in all 4 areas at the same time. This is a concept that was developed by 2 gentlemen. I'll give the information in the blog post that I'll be posting about this, but if you don't grow finances along with the people and relationships, along with the processes, and also the growth and learning at the same rate, then you'll have a lopsided or unhealthy rate of growth. So finances definitely play into this. So I'll answer just 2 more questions really quickly before we end. Let's see. Can you explain the difference between sales and profit? Or are they the same thing? Well, simply, sales are what we collect from customers, and profit is what's left over after you subtract expenses. And I think a lot of business owners, especially if you're not numbers oriented, you may see a lot of revenue or sales, which are pretty much interchangeable. Revenue can also be other forms of money coming in from investments or that kind of thing, but generally they're the same thing. If you have a lot of that coming in, you're making a great month for sales, but your expenses have gone up also, then you may not have much left over, so your profit margin, the percentage of what's left over, would be very low. And it's important to just face these questions directly and not be afraid to talk about the difficult things that your numbers may be telling you. I think if there's one thing I would really hope that you learn from this, it is that. Keep in mind that these types of topics, especially when we talk about things that may relate to past experiences where money has been tight or where you didn't have enough, it can be very difficult to face that now that you're in charge of things, and maybe that's why you're holding back or you're making decisions that will that you're doing in order to protect or to self-preserve, but it's actually causing your business to have some difficulties. So the more that you can dive into those reasons why you're doing this, the faster you'll be able to make decisions that are risk intelligent, which means that you're able to understand the potential threats and to do something about it. Okay, so let's see, final question. What can I do to expand my business without running out of cash? Really briefly, I would focus on the 80-20, which is an economic principle where 80% of your money is coming from 20% of your actions, or 20% of your services or customers or tasks, 80% or more. So most of your money is coming from one particular source or area. I would focus on that and continue to try to expand that. This year was profitable, but how can I prepare for a not so good year? This is another topic that is uncomfortable for people. I very strongly recommend lowering your debt ratio and not getting in debt if possible. It's not always possible, but because of the nature of how the economy can change rapidly and the way that debt can really eat away at a business and at your confidence, it's better to avoid that if possible and to focus instead of on growing the profit itself instead of hoping that things will get better in the future. It's almost always a good idea. And finally, can you recommend a good book about analyzing profit margins? So we touched really briefly on the many KPIs, key performance indicators, or I didn't mention, but benchmarks would be numbers that you're trying to reach, and you can show even visually with the color coding whether you're achieving your goals or not. Red would be you're way underperforming, yellow would be you're not quite there, and green would be you're doing as well as expected or better. So you can use different software methods to see this every month, and you can also just do this on your own without using a software method. You can do it by hand if that's what makes you comfortable. Believe it or not, I have a lot of customers that don't like using computer systems for their finances, and that's totally fine if you want to just use just an Excel spreadsheet rather than using a complicated software system. I understand. But to get more information, I recommend using this book. It's The Essentials of Finance and Accounting for Non-Financial Managers. I got this a while ago because I was a data analyst in a company, and my job required me to know quite a bit about financial data and logic solving and a lot of different aspects of analyzing numbers. So I use this book to get a better handle on how exactly I'm supposed to understand all the aspects of a profit and loss statement. So This book is really, really in-depth. It offers not only a really good base understanding of finances for a non-financial person. So if you don't like talking about numbers, this is great. It uses a lot of real-life kind of case study examples to walk you through a business's potential challenges, and then gives you a lot of hints about what to look for on a profit and loss statement, on a balance sheet. So it's not as scary as just looking at your numbers and trying to figure it out. So that's a great resource. And the other one is this one. I found this on the recommendation of some reviews online. It's called Growing a Business by Paul Hawken. He is a speaker who is not a traditional business owner. He owned a seed company, a catalog company, and he talks about his journey of managing in a non-traditional way. I really enjoyed his perspective on how to look at business finance for someone who's maybe not so numbers oriented. So his perspective is really helpful. I hope that you've enjoyed this presentation, this discussion. If I didn't get to your question, then please let me know in the comments or send me a message, and I would be happy to answer that question for you. I'll be posting a link to the summary to my blog, because I'll be transcribing this and giving you more information about this topic. But thanks so much for tuning in, and if you have any questions or comments, you can message me or contact me through my website, leconteconsulting.com. I have a lot of other articles and resources that have to do with understanding the business of your business from a more balanced perspective, and finding solutions to the problems that are holding you back. So thanks so much for tuning in. Have a great day.